If you buy $10 million worth of machines today, value of those machines goes down by 80% over the next year. It doesn't matter how much you mine because it's going to be a big net loss for you. The addressable market for Bitcoin mining, and it's maybe $10 billion in a year. The NFT marketplace is huge. People freaking like NFTs. Like people that have a CryptoPunk, people that have a Bored Ape, a DGod, they just like them.
A lot of people's views on NFT have been colored in a big way by all the scams that have been out there. To kick it off, maybe you could just give us a little bit about your background, how you started Luxor, but also what you were doing before you got into the mining industry.
All right, let's kick it off. My name is Nick Hansen, CEO of Luxor. I've been building Luxor since 2017. Previous to that, I was a lead member of technical staff at Salesforce, working on Einstein, effectively Alexa for Salesforce. So imagine something like, hey, Einstein, convert this lead, or hey, Einstein, close this opportunity, that sort of thing. Had always been interested in Bitcoin and crypto, started mining Bitcoin in my basement when you could do such a thing with GPUs in what would have been 2013 or 14 or so. Was right around the time that Butterfly Labs was coming out with the jalapeno. So I bought a jalapeno. If anybody remembers, the website was so hype. Like you could go and see a jalapeno and be like, that thing's $200. I think it was about $200. And it's going to make me $1,400 a month. Like, duh, that's a great investment. Little did we know that they would just mine them for themselves for months and months. And the thing was, a year late. And by the time it showed up, it was a brick. But it was a great learning experience because that's what happens. That happened a lot in the Bitcoin mining ecosystem up until, I would say, 17 or 18 when we started getting a little bit more professional. In 2017 is when I went full-time is when we started Luxor. And that was mostly around an altcoin called Siacoin. And we weren't even building a Bitcoin mining or a mining pool at the time at all. We were doing something called Sia3. So we were working on a coin called Siacoin. It's supposed to be like decentralized file storage. And we were like, let's see if we can put an S3 API on top of that and try running like a decentralized S3. So you could serve web assets, images and things like that, probably on every single page that you use on the web, on the internet today. Let's use Siacoin to distribute that information. Of course, it was not ready for that. And I don't know if it even is. It may not even be ready for that now. But it was a great learning experience. I got to meet Eddie, one of the original co-founders of Luxor. And what we did find, though, was that there was one big mining pool in Siacoin had 98% of the hash rate because they had figured out how to implement Stratum for Siacoin. So what we did is started building from scratch a mining pool that gave, from scratch, we started building this mining pool for Siacoin that started, effectively giving people another option. So we started breaking up this monopoly at the time. Over the next couple of years, we had learned, that we have a pretty good knack for this. People seem to like our products, our taste for aesthetics and design, and also they're relatively high performing compared to, what was available in the world at the time. And so we went on to, at nights and weekends, add extra mining pools for other altcoins. So Decred and Monero and Zcash and a bunch that I can't even remember, Aeon and Flux and all sorts of things that we were just mining all sorts of shitcoins. And so we got, we got pretty good at that. And then we added there was a key unlock called Catalyst, which was this feature that allows you to mine altcoin and get Bitcoin. Basically what we're doing is pricing your altcoin hash rate in Bitcoin. And that was a key unlock for us because at that time we realized, Bitcoin or compute power has some asset value at a given time. It fluctuates over time. And you can start to build financial products and things like that around it. And then we also determined, like at the time, Bitcoin has that. That was kind of when we came up with the concept of hash price, which is something we'll probably get into later in the interview. But hash price is basically the value of mining hash rate at any point in time. And so we started building effectively, this we call it a catalyst feature, and then over the next couple of years, or it would have been about 2018 or so. This time, we're starting to get a lot of traction. And then I realized, okay, I should probably go full time in 2019. So I went full time July 1st of 2019. Never looked back. Eddie and Ethan and Guzman joined a little bit later that year, and we were off to the races. And then in 2020, of course, that's a very weird year. The first part being COVID, the last part being like the V-shaped recovery and the beginning of all the inflation that we see today. It's been a wild ride. And so now we're a team of 51, I believe. And we're, pretty much building all sorts of mining related products specifically for Bitcoin now. So we've gone, full circle, got in effectively. Most of the altcoin pools that we have either been spun down or moved off to, kind of the background. We're really focused on Bitcoin mining firmware, Bitcoin mining hash price derivatives, and RFQ systems. So Luxor RFQ, which is our ability to buy and sell machines through a platform as opposed to Telegram chats and things like that. So a little bit of a long-winded story of who we are, and how we got here, but that should cover it. And yeah, that's who we are. That's Luxor and how we got to where we are today.
Yeah, it sounds like a wild ride, and it's been really, really amazing to watch from my point of view, just seeing the company continue to grow, seeing you guys putting out amazing research. I had the chance to speak with Jaron the other day. Hope I'm saying his name right. On
Yaron.
One of our Twitter spaces. Yep. Yaron. Yeah, I spoke with Yaron on one of our Twitter spaces, and the guy is just unbelievably intelligent. And it was amazing just looking at all the research you guys are putting out there. So my question for you is, as you continue to expand and grow, it looks like, correct me if I'm wrong, but you were going and trying all of these different things, and almost like any entrepreneurial journey, throwing mud and seeing what sticks, but then coming to a point where you're seeing, okay, a lot of the real value within this ecosystem is within Bitcoin. Let's try and build products around that, try and help develop this ecosystem, make it more robust, and help push the mining industry forward. And now, what has been your focus in terms of, I know you've got the mining pool, and maybe if you want to talk a little bit about how you bootstrap the mining pool, that would be useful to know. But from starting the mining pool to today, how has the organization continued to evolve?
Yeah, so early on, it was, Eddie and I were the tech guys. Ethan and Guzman were the business guys. Guzman has, an accounting background. Ethan worked at Goldman Sachs, so he's got, the banking background. But Luxor is a tech company, and we've been, really focused on how do we, somewhat approach every problem like a technology problem, and use that to scale effectively. So a big focus throughout 2022 for Luxor was building out 3 different products. And I'll go into each of them a bit. So Luxor firmware was one that we knew we wanted to do, and it was from the ground up. We wanted to have a full rewrite of the firmware, basically giving us control end to end to iterate very quickly, produce features that nobody else can produce, and because of the way that we approach the development for that. And that takes a lot of time and a lot of engineering effort, a lot of smart people, a lot of hours to come up with not only the way of getting the old firmware off the machine, but getting our firmware on the machine. And then, of course, building our firmware. What do we actually want to put on the machine? What kind of features would we like to, push out to the world? That was one we spent a lot of time in 2022 working on. And then we have Luxor derivatives, which is something we have been conceptualizing for a long time. Like I'm actually wearing a hash rate index shirt today. Hash rate index was originally built, we had been pioneering this idea of hash price. And we said, well, let's just build a website that tracks it over time. Like it's a relatively simple website to build. Let's start building that. And so hash rate index came from just wanting to put a chart on a web page. That was it. We wanted to show the value of hash rate over time and put it out into the world. Well, of course, hash rate index is much more than that now. But the concept of hash price we'd been thinking about this since 2018, 2019. And we wanted to build financial products based on that value, the value of hash price at a point in time, and how it fluctuates. So we've been trying to figure this out, but we of course, none of us have a like derivatives or trading background. And so when we went and hired Matt Williams, that was kind of a key unlock for us. We hired him in May of 2022, and it's been critical having him on the team to get this thing off the ground. And we called it the Luxor Hash Price NDF. The Luxor Hash Price NDF effectively allows you to hedge your mining output or lever up your mining output based on the value of hash rate. So, for example, today the value of hash rate is $80 or so. You can say I think it's going down from here. I'm gonna sell at this point, and that allows you to lay off some risk. Or say I have 50 petahash mining right now. I'd really like to lock in my operational expenditures and not have to worry about the value of hash price floating over time. I'm gonna lock that in at $75 a terahash, and at about say 25% of my hash rate, or 50% of my hash rate. We'll say 25 petahash. I want to sell that forward for 6 months. This gives us a really awesome tool, and it is something that the market has been demanding. And this is a business line that has been incredibly interesting. People have we've had more people than we know what to do with coming to the doors and knocking about how do I try this thing out? How do I use it? And then of course we have Luxor RFQ, which is the extension of our brokerage business. So Luxor had always been, we've been buying and selling mining machines for a while, but now we have built a platform that allows anyone to buy and sell machines, basically making it really easy for suppliers to come and post what supply they have, and the sellers, and then buyers to come in and acquire that, or conversely, buyers can say, I'm looking for 1,000 M30S plus plus, and we have suppliers that can fulfill those orders. And it becomes a very easy way of buying and selling machines, and it really unlocks a lot of liquidity, which is one of the benefits that we've seen, not only to buyers and sellers, but to other brokers as well. Like, we think other brokers will get just as much value out of this as we do. So those are the big three things we've been working on: Luxor firmware, Luxor derivatives, and Luxor RFQ. And of course, we did acquire Ordinal Hub in the last 2 months, which has been an incredible ride. But we'll maybe move on from Ordinals just for now until we get through mining stuff.
Yeah, I'm excited later in the episode to dive into that. So if we take a step back and we look at it from the person who's within Bitcoin, right? I feel like everyone goes down their own journey. I mean, it sounds like both of us ourselves weren't always focused on Bitcoin. You had dealt and dabbled in other coins, and same thing with Saz mining. We had mined Ethereum, we had mined Zcash in the past. For the person out there, wherever they're at in their journey, maybe they've dabbled in other altcoins, maybe they own Bitcoin, maybe they're mining right now, or they're looking at mining. Mm-hmm. That journey of actually going into mining, it takes a lot of learning. There's a big educational curve. And a lot of the things that you're talking about, I think, are so critical for the person who really wants to dive in, for the company that wants to go in and manage their treasury, manage their risk, maximize their profit. A lot of times when people think about Bitcoin mining, it's very easy for you to think about it from that you're selling the Bitcoin versus the cost to produce that Bitcoin. But there are so many variables that are tied into the cost to produce that Bitcoin and how you manage where you're selling that Bitcoin. So if we imagine that we have someone out there who is mining, who is trying to take that next step to professionalize themselves, take their mining game to the next level, but really just approach it from that more institutional or risk mitigated approach to maximizing profit, risk adjusted returns. How can a miner today begin to leverage some of these tools that you guys have a very, very good understanding of? How can they begin to leverage these tools and actually begin to implement better strategies or better opportunities within their business?
Yeah, it's a really good question, and one that a lot of people there is no solid answer for. I can give you a lot of different themes or things to look for, especially as you're traversing the mining space. So I think the first starts, like, one of your biggest capital expenditures is going to be an acquisition of machines. And so most likely you need to find a really good target price per basically dollar. We call it dollar per terahash. you need to find a really good dollar per terahash number that you think is is going to be a great entry point. Because if you buy $10 million worth of machines today, and the value of those machines goes down by 80% over the next year, it doesn't matter how much you mined. You're gonna I shouldn't say it doesn't matter. It almost doesn't matter how much you mine, because it's going to be a big net loss for you, because that you'll now have to mine out of that hole as well. So certainly going to be a problem if you don't have a great entry. So I would highly recommend monitoring the trends in hash price, monitoring the trends in our rig index. So another index that we produce at a hash rate index is we call it the ASIC rig index, or the rig index, and that basically shows the value of any value of machines over time. It's an interesting product. It's an interesting data problem. We go out and scrape like WeChat groups and Telegram chats and Bitcoin Talk and all these different places where people historically have transacted in mining machines, and produce a reference rate for each of the four different efficiency tiers. And so would definitely keep an eye on that. If you see that we're at like a relatively local maximum, maybe it's time to figure out some different strategies or buy some different types of equipment, that sort of thing. So it all starts with acquisition of machines. You want to make sure that you acquire machines at the right time. And then, of course, the next step is finding a good host, somebody that's got consistent access to power. If you're in a jurisdiction that does curtailment, you want to make sure that you're getting some of the access to the to the revenue from that. Because if your host is able to spin you down for, say, 5% of the year, that's just 5% of the revenue that you don't get to see unless you're getting access to some of the curtailment revenue that comes from that. Also, looking for a host that has maybe a bit of a track record would be really beneficial, because there are a lot of hosts that jump in during a bull market because they think, oh, look, I'll be able to make all this money. It's really easy to split revenue with a miner, but if that revenue gets dried up, they go out of business, and then you're stuck with no host. So certainly those are some of the ways that I would say, certainly some of the ways you could identify a host that makes a lot of sense and is somebody that you are willing to partner with because you're going to be in that contract for probably somewhere between 2 to 5 years. So you want to have a host that you're really comfortable with. They've got a track record of experience. They're able to prove that they've been able to run machines consistently for a long time. That's certainly another avenue. And then, of course, the cost of your host is going to be a big factor. The problem I see a lot of people get into is just only looking at kilowatt hour or dollars per kilowatt or cents per kilowatt hour. If they're like, oh, this host is 7 cents, but this other host is 6.5, I'm going to go with the latter for the 6.5 cents. But that does a lot of times cloud your judgment, in that maybe the host that's 6.5 cents is offering it. They're probably offering that for a reason as compared to the other. Maybe they don't have a great curtailment strategy, or they're taking some upside, or they don't have a history, so they're trying to lower their price to get new folks in the door. You have to really think about why if I'm going below market rate, why am I going there? And so I would say, and what's the host's incentive to offer hosting it below market rate? You would want to really dig into those numbers. So those are the two upfront things that you can do to get settled on Bitcoin mining. Find a really good entry for your mining machines, and then find a really good find a host that you're comfortable with, that meets the criteria. And then it comes into, so we haven't even plugged in a machine yet. We haven't even hashed one hash or gotten one payout. So a lot of prep goes into that. Of course, there's publicly listed companies now, and they have board of directors and strategists and all that stuff that go in and make these decisions for them. So you have to do it for yourself and come up with a good strategy here. Now, you get your machines plugged in day one. Now you have a lot of other things to think about, like how can I maximize uptime? How do I make sure that these machines continue to run for a long time? And that's where Luxor Firmware really steps in. We're able to more effectively monitor a lot of the, I shouldn't say we're better at monitoring, but we expose a lot of information about the machine that your that something like Foreman, which is your ASIC management tool, is able to capture and see like, how is this machine operating? Is this machine going to be in need of repair soon? Is there, are there chips on this board that have, that are performing poorly, which indicates, maybe this machine is not being operated well. Either, machine temps are high. It could be very dusty. Lots of things could go into, metrics that you can look at on a dashboard and see, okay, these machines are not operating great. So that's another thing. You got to really be able to operationalize the information that you're getting from the mine, turn that into a heuristical model that you can say, okay, these, all these machines are operating at good efficiency, or not even good efficiency, under good conditions, and then also, maximizing for efficiency. So then, of course, you pick your mining pool. Hopefully, you pick Luxor, because we gave you all this great information, and now you got this awesome site to go to. You've got basically any tool that you could look for in hash rate splitting and all sorts of different features. All the payment methodologies that we support, as well as year-end reporting, and then of course just a great team. So I would say that you pick the mining pool, hook it up, and then monitor the payouts, which is something that Luxor is able to provide you great insight into as well. Speaking of the reason that's near and dear, it's the 20th. So 2 days ago we had to do our taxes. Luxor provides a really nice tax report for all of the information. Anything that you need to get out of your anything you need to get out of the dashboard and load it into TurboTax or Coinly or whatever, that all can be done through the Luxor platform. We have like API integrations with all the tax reporting software. Get maybe lost the plot a little bit there, but you're asking like, how can you set up a really good mine? How can you scale your mining? How can you become, how do you level up your mining? That's some of the ways that I would start to look at, a new deployment from soup to nuts, from buying machines to picking the hosting provider to setting up your monitoring and your efficiency tier, your operational efficiency, to picking a pool. And then of course, there's a lot of other stuff, but I feel like I've been going on for like 20 minutes here. So I'll kick it back to you and let you jump in.
That was actually exactly what I was looking for, all the way from start to end, being able to evaluate the landscape, but then finding a way to operationalize and become a miner. And there's so much value there. The big key takeaways, if I was just to reiterate it, was you got to make sure you get a good entry price. If you're getting in when ASICs are over 10K and then during the bear market they're a 2K, then it's really hard to make up that margin. So one, entry price; two, hosting, which incorporates the electricity price. And you touched on two very important aspects there, which is not just the operational cost, the hosting cost per kilowatt hour, but the actual reputation of the company that's running the rigs and the uptime. Because at the end of the day, if your rigs aren't online, then you're not going to be able to be mining as much Bitcoin. And so just really paying attention to all variables involved with how much Bitcoin are you going to produce and how much is it going to cost you. Then you moved on to a very important piece, which is the mining pool. And from the mining pool perspective, I think that you touched on a couple important pieces. Just for full transparency, I'm a huge fan of what you guys are doing at Luxor. We're actually at SAS Mining integrated with Luxor and Foreman. So The way that we provide this service, where you can go on to SAS Mining and then just buy a rig and then hook up a Bitcoin wallet and have it start to deposit, that is made possible because of the technology of both you guys and Foreman. So I'm a huge fan of what you guys are doing. And that's a very important piece. You got to be able to make it easy to be able to track the data, make sure that you're actually having a functioning mining pool and everything's working properly.
Right.
And then finally, you brought up another very important point, which is just reporting, just understanding how do you have eyes on your operation and how are you going to be managing it over time. So I think that was a beautiful layout of everything that is important for anyone out there. If you're looking to start mining Bitcoin, if you're someone who got burned in altcoins and you realize that a lot of these shit coins have no value and you're trying to get into the Bitcoin ecosystem, You want to go out, you want to own Bitcoin, you want to go out, you want to mine Bitcoin. You just got it here from the CEO of Luxor on how to go from zero to fully operational and compliant mining. So I love the way that you laid that out.
Some altcoin mining provides a high beta play on Bitcoin. Like, for example, like a Z15, which is a Zcash miner, maybe one of the most profitable machines ever made, just because there were not many of them ever made, and your competition is much lower. Maybe there's, I don't know, 10, in the order of like maybe 30,000 of those ever made, where there's millions and millions of S19s and XPs and S19 Pros and XPs and J Pros and M30Ss, and now they're on to like M50 something, M50Ss and M56 and all sorts of different Watts miners. The competition is incredibly high for Bitcoin mining, where some altcoin plays can be a lot higher beta, but also like if somebody had bought a Monero ASIC mining machine, that thing is worth zero and is producing zero. So you end up with nothing. So Bitcoin mining, the upper and lower bounds are a lot tighter, where you're not going to ever make zero. Like there's very, how do I say, there are very few scenarios in which your Bitcoin mining investment just goes to zero. It could go down, it could probably go down a lot, but it's never going to go to zero. If you invest in altcoin mining, there's a very good chance that anything you buy in altcoin mining will go to zero, like 100, like absolute zero. You will not be able to liquidate the machines for anything, and you will have acquired coins that don't have any value. But then again, there are some scenarios where, say you find a really hot coin and you're able to mine it to the top. You're able to, do like the Z15 model. It could be very profitable. But I would highly recommend anybody that's never mined before, stick to Bitcoin mining, because the bounds are a lot closer. The bounds are a lot tighter. You're going to make a return. It may not be the return you're looking for, but it is going to keep you from getting absolutely crushed.
So let's take this talk track that we were going through before to the next level, right? So now you're up and running, you've got a miner. This concept of what's the name of your hash rate marketplace again called?
So the Luxor hash price NDF, the derivative?
Yes. Yeah, the derivative. Yeah.
Yep.
Okay. So can you explain in simple terms why a miner might want to look at this? Like, what are the important key takeaways for a miner to know about this product?
Yeah, so the Luxor hash price NDF is going to be something that is going to be it's going to be scaled. Like, you're going to be, trading hundreds of petahash, most likely. You'll have to be an accredited investor or institution, which is, obviously raises the barrier pretty high. But unfortunately, that's the world we live in the US. You can only do swaps and things like that if you're an accredited investor. And then we have to do there's this document called an ISDA. I don't remember what ISDA stands for, but it's this long International Swaps and Derivative Association document. It's a very standard document. It's very long. And basically what it does is it outlines what happens if one side of the trade defaults in another, in any scenario. And what are all those cases? So basically we have to be able to sign an ISDA. So those are some of the things that those are some of the prerequisites. But let's say you have all of those prerequisites and are good to go. You've got a couple hundred petahash. You're producing a lot of hash rate and a lot of Bitcoin, and you want to hedge some of that value. I'm looking at the chart right now at hashrateindex.com, and you can see that for today you'll make $76.12 with 1 petahash. The way that the NDF works is that we produce a time-weighted average reference rate over the course of some tenor for the contract. Let's just say 30 days. So if you wanted to sell forward at spot price being $76.12 for the next month, that would be 30 contracts, and the value of each contract would be $76.12, which comes out to a notional value of $2,283 per petahash for 30 days. Now, everybody knows that, or not everybody, generally, mining, the value of hash rate goes down over time due to difficulty adjustments upward, that sort of thing. So most likely you're going to end up selling, if you're trying to sell hash rate at spot price, you're going to end up selling at a discount, probably something around, maybe 1% or 2. So you'd probably say, you're going to probably take your hash rate that's worth $76, and you're going to end up selling it for, let's say 0.985 times 76, somewhere around like 75. And then you can lock that in and say, I know that every day I'm going to get paid the value of that hash rate, which is $75. So that's a great way for somebody that is, potentially exposed to market conditions, volatility, to lock in some value, and make sure that the value of your machines is going to continue to, or how do I say that, the operational expenditure that your machines require to continue operating is covered. You don't have to worry about that anymore. So we talk a lot of folks talk about like trading hash rate to potentially make more returns or things like that, but we really try to focus on the hedger. So like in the case that, say, you go short hash rate, you sell hash rate at $75, and hash rate rips to $80 or $100, you're gonna say, oh well, I lost so much money on I was short and then it went up, I lost so much money. But the real thing is that you didn't, because the value, you actually have mining machines turned on, those machines are already going to be producing extra dollars per petahash for you. So effectively what happens is you end up being neutral. You just gain nothing. And that's really the trade-off that you're making when you decide, I want to hedge at a certain price, is that I'm okay if price goes up from here. I just don't want it to go down from here. And that's a really powerful tool, and is really the way that most commodity markets start to develop. The price of oil, for example, almost all oil is hedged in some way, in some capacity, and the reason for that is because I don't really I have my business works at this price. Let's say it's $80 a barrel. My business works at this price. I'm willing to sell that forward. And if the price of oil goes up to 100, I'm okay at 80. Like I've locked in my margin. I'm able to unlock capital, make other investments, because I know that I don't need to have a bunch of capital sitting around in case, say, the price of oil goes down to $50. It makes businesses much more nimble and gives them opportunities to invest where they wouldn't be able to invest otherwise, because they don't have to worry about the volatility and exposure to the underlying by having some sort of hash price hedge, or having some sort of hedge available to them. So a lot of reasons why someone would want to get involved and start trading hash rate. We've gone from this market having effectively zero participants in December to we're trading I think we've done close to 19 exahash in total trades already, and just continuing to get more and more demand. This has been probably one of the most important and interesting products that we've brought to market in a while. So definitely excited about it, and something we're definitely going to continue to push here.
Yeah, well, if I don't have a magic ball, but if I was predicting how this market's going to evolve over time, I think it's going to become a very, very big marketplace, just with more and more miners coming online, more and more hash rate, and just how needed it is. When you're a miner, if you go back in time and you look at where the industry was when Luxor was starting, yep, there was none of this type of opportunity for miners to try and hedge their risk or lock in margins or yep, maximize their profitability, minimize their downside. And as you mentioned, commodities markets over time, this is something that the more that they mature, these types of products and marketplaces open up. And overall, it just allows the market to become more competitive, more robust, and more mature, which I think is needed for the entire Bitcoin ecosystem to continue to evolve.
Yeah, it's something. It's I mean, the more sophisticated miners, the ones that we know that are somewhat on the bleeding edge and are willing to experiment and try new things. They've got a really big advantage right now, because they're out there, learning how the derivatives products works, how they get involved, how they start, utilizing this to hedge portions of their business, and that's something we're really excited to participate in and continue to foster. So yeah, Luxor Hash Price NDF, it's a great product, and folks are really, really excited about it. So
one of the topics that is been in the news a lot recently is the US's view on Bitcoin mining and potential regulation that might be coming down the pipeline. When mining was banned in China, it was one of those things where we saw this massive exodus and the miners having to leave China and a lot of them coming to the United States, a lot of them within the United States going to Texas. And now we're seeing legislation that is trying to prohibit the Bitcoin miners from being able to participate in demand response. We've spoken about demand response on this podcast before, but in short, from a miner's perspective, if you want to maximize your profit and support the grid, then you want to participate in demand response. And so with everything that you're seeing happening globally, I mean, Luxor is in many ways a global business, if I'm not mistaken, right? Because you've got a lot of these products that can be utilized by miners anywhere. How are you viewing the geopolitical or regulatory risk from the mining perspective? So if you're a miner out there and you're listening and you're wondering, hey, how do I go and process everything that's going on within the United States? How are you looking at it personally?
Yeah, so I would say that right now the biggest risk to our industry comes from regulatory overreach. Some of the big publicly listed miners that are mining in Texas are, they've become so large and or have such a huge head start on the rest of the market that I think the only risk that they have right now to them, potentially not being in business anymore comes from the government and government overreach. Of course, you're lightly referencing the New York Times article that came out recently, putting shining a pretty bad light on Bitcoin mining as a producer of greenhouse gas and, basically accelerating the climate crisis. Just for everybody, just so that we're all just so everybody, my biases are exposed here. I do believe that global warming is happening. I believe that humans are causing it. Where I start to kind of fall off is I don't know if it's really a crisis as much as we were taught when I was in college. It was like, oh man, if we don't stop this greenhouse gas, everybody's dead in 20 years. But I'm not sure if that's the case.
I'll thought the same thing.
Yeah, exactly. I don't know if that's really the case, but I do believe that global warming is happening, and I do believe humans are causing it, and I believe that it's probably as a result of our greenhouse gas emission, like methane and carbon dioxide. So that's my bias. If anybody's listening to this and they're like, oh, that guy's like a tree hugging hippie, I don't know. I'm somewhere in between. So with all that said, the New York Times article, what it tends to miss is that, yes, maybe Bitcoin mining right now is net negative for greenhouse gas and climate change. It's probably not the best thing. Probably not the best thing for the environment. But I do think, and I've written an article about this around this time last year. I do think that Bitcoin mining is the catalyst for us to transition to a more sustainable energy, environment. So that doesn't just mean wind and solar. Like I know a lot of people think, oh, like this guy's talking about renewable energy. That means wind and solar. Wind and solar are a part of the mix. I do believe that a lot of folks that are in energy say that you've got to have some sort of consistent base load, like something like a coal fire plant. But I certainly believe that wind and solar will be a big part of our energy mix into the next century. Reason being, like the sun is a really great source of energy, and those are both directly related to solar. Energy from the sun hitting the earth, causing wind, solar, of course. I think that geothermal and hydro are great ways for us to generate energy. I think that those are also places where you find some of the cheapest energy right now. And so that's why a lot of Bitcoin miners are, traditionally we're hydro. Like, for example, I live here in Washington. Eastern Washington used to be the mecca of mining, back in, 2014, 15, 16, maybe even 17, when they were building a company called Gigawatt. They were all, and that's all hydro. There's an old aluminum plant here. That plant got shut down. They're selling that energy to California at the time, effectively free. And this guy, I believe his name was Dave Carlson, comes in and says, hey, I'll buy all that energy for 3 cents a kilowatt hour, which is a great mining rate. Like, of course, anybody that's mining now would be like, oh my God, 3 cent power, that 3 cent power, that'd be amazing, especially in the US, that'd be amazing. But the local governments were like, we've been selling this for like, I don't know, a penny and a half. And so sure, yeah, if you want it, you can have all you want. What they didn't realize was like, yeah, all you want is literally all you want. So they ended up, scaling up massively here. And that was, and then of course, there were some bear market effects that caused some bankruptcies. And now Bitcoin mining is very much dead in Washington. I don't want to say it's dead. There's a lot of miners still here, but it is a lot harder than it used to be, where the governments had open arms and were like, yeah, you can take all the power you want. It's not the case anymore. I'm concerned that that's going to happen in Texas. But back to energy generation. So I think that the big story of energy generation that we haven't really gotten into yet is nuclear. I think that nuclear power has made huge technological advancements since some of the disasters that we saw, like Chernobyl and the island. Those are definitely things that I think are behind us now. We also don't like. I just learned this. You don't like the nuclear plants that we have today don't actually produce nuclear waste anymore. They're able to do something called a full consumption. So they basically consume all of the material that would be traditionally put somewhere in the mountains of Nevada. All of that material is burned, and there's no radioactive leftovers, and so they're able to pretty much mitigate all of that. So I think that nuclear needs another hard look, and I think that that's a great way for us to continue to transition off of coal fire and other fossil fuels. The reason I think that we need
nuclear. Sorry to jump in. I don't want to derail your train of thought if you're going somewhere with it, but I do want to touch on this topic of nuclear energy, because I feel like this is a topic that is very divisive, and I'm still in a point where I'm trying to figure out where I stand. I'm more pro-nuclear than not pro-nuclear, but in unpacking your point of view, I would like to understand what you think are the big data points or axioms of your belief on why you're pro-nuclear. So what are the key things that you've realized that many people out there might not have yet realized about nuclear? I think you mentioned one in terms of just the actual waste from using nuclear energy, but what are the foundations of your belief if you're trying to convince people, hey, nuclear is the way of the future, nuclear is the way to go?
Sure.
What are those important things where someone can just walk away from this podcast and think, okay, wow, I didn't realize how beneficial nuclear energy could be?
Okay. Yeah. So you need what we call consistent base load. Like for example, in Texas, their grid can fluctuate, somewhere between, I think at peak, it's like 85 gigawatts. This may be off of a little bit old data, but like at peak, it was like 85 gigawatts. And at the trough, it was like 60 gigawatts. So what that means is like, there's a 25 gigawatt delta between the minimum amount of energy that you need and the maximum. Ideally, you have something that's able to make up the majority of that 60 gigawatt minimum. Right now, that comes from coal and nat gas. And so I would say that is the target for nuclear energy. So where you would insert nuclear energy production would be what we call the base load, basically the minimum amount of energy that your grid will ever need, based on all the factors that go into it. When houses turn on, when factories turn on, all that stuff. So that would be a great place to insert nuclear energy. Now, why would you want to do that? Okay, that's the next question. Okay, we've already got coal fire plants. Coal is really good at producing energy. Of course, coal does come with a lot of comes with a lot of downsides. Coal has a lot of heavy metals. Not only does it produce a lot of carbon, it also produces a lot of heavy metals, carcinogenic byproducts, that sort of thing. So nuclear also comes with some of its own downsides. But I think that one of the only byproduct of nuclear now that they've improved, that the technology has improved so significantly, is just water vapor. And so that would be, one of the reasons I think we should do that is, we're able to reduce our carcinogenic CO2 emitting coal fire plants and replace them with nuclear energy. So that's one. And of course, one of the things with nuclear energy is that it does require, it's quite hard to ramp up and down. And so that's why you would want it to be that base load for a grid. So you basically just run it full throttle, or whatever I don't know what throttle they use, but whatever they call the throttle, but you maximize, you basically turn the thing on and it just runs. And it's producing all the energy that you need. This also introduces a really nice avenue for Bitcoin mining to get involved, because if for whatever reason, you put a Bitcoin mine between the nuclear power generation and the grid, you crank that thing, you're mining Bitcoin, and if for whatever reason the grid decides it needs way more energy, you just spin the Bitcoin miner down, and you don't actually have to do anything with the nuclear power plant. Of course, that seems like a very nice thing. That seems like a very nice byproduct. You don't have to do, you don't have to touch like the scary nuclear power plant. Another reason I think that nuke obviously has a really bad reputation is because of like Chernobyl and some of the disasters that have occurred. Like that region will never be the same because of what happened there. So most likely, that's obviously a big detriment to nuclear generation. But from what I understand, that type of thing cannot happen with current technology anymore. It's like impossible for it to happen. Of course, I am not a nuclear energy expert. I'm just regurgitating information that I've been given. Why that occurs, I can't tell you that, but just given information from people that are much smarter than I, that effectively the idea of a nuclear meltdown is no longer conceivable, impossible with current technology. So I think the downsides are very low. The upsides are very high, reducing our reliance on fossil fuels. It also gives us if we go away from just like the scientific reason why you'd want to have nuclear generation, the political reasons for wanting to reduce our dependence on foreign oil, all of those things, basically making us more of a sovereign country when it comes to energy. These are all reasons why I think that producing nuclear energy, I think, is really important. But I don't think it has been sold as a silver bullet. I don't think it's a silver bullet. I think it's a part, it's a cog in a very complex machine, which happens to be the energy grid for the United States, for the United States. I think, anybody that tells you that nuclear energy is just going to solve all the problems certainly is not, being very truthful, or maybe doesn't know, all of the facts. But it's just it's just a portion of the story.
Yeah, the way that I view nuclear energy is that when you just look at the pros and the cons of it, the pros are it's a long list, and there are a lot of beneficial attributes of nuclear energy. The big looming downside is the devastation that you've seen and that's left in people's mind regarding Chernobyl and these other accidents that have happened. And this is the one area that I also definitely need to dive more into, is understanding what were the mechanics at play and what went wrong in those disasters, and what is the rationale for something like that not being able to happen again. I was unbelievably pro-nuclear at one point in time, and then I had a conversation with, I'm still pro-nuclear, just to caveat this, okay, but I had a conversation with our president and chief operating officer, Kent, who comes from the solar industry, and he had a very interesting take that was different, and he wasn't necessarily so pro-nuclear. He would rather focus on other energy sources. And I said, well, why is that? And he said it was because he believes, and I guess we don't really know, because there is what he believes is that he doesn't think that these nuclear plants would be able to be bootstrapped or put up if it wasn't for the backstop of the insurance that's guaranteed. So, because apparently there's the government that insures or guarantees the disaster side of if a nuclear disaster happens. And he said, look, I don't know what'll happen if the government wasn't there to backstop that, but his view was that it should be left up to a free market to really assess whether this is something that's viable or not. And if there isn't a company that's willing to insure against the disaster, then it's not worth the risk, versus there is a company that's willing to do it, then it is worth the risk. But it leads to an interesting question. Well, if there wasn't this governmental backstop on ensuring a nuclear disaster, if something happens, maybe there would be lots of companies that would come in and say, look, I'll take on the risk. I have the ability to insure if a disaster does happen, but I just haven't looked into it deeply enough. We've reached the extent of my understanding on nuclear energy.
It's a very complex topic. If you wanted to have a much more in-depth conversation around nuclear generation and generation as a whole, that is a portion of the business that, of course, I have to have some like knowledge about. So I osmose some of this data, some of this information. But somebody whose job it is to know how this stuff works is Alex Brammer. So he went to work at Talon Energy. They have a big nuclear asset. It's producing a lot of energy somewhere. I don't remember where that asset is at, but and they're plugging in a bunch of miners. So yeah, that would be a guy that you could definitely talk to about not only nuclear generation, but all generation.
Yeah, I'm gonna have to have a conversation with him at some point. I've seen his name around many times, but I guess I just haven't gotten around to it.
Yeah.
So I think now is a great time for us to actually go into ordinals and inscriptions.
Okay.
For everyone listening, I think the best place to start is if you could lay out what these concepts mean, how you look at them, as if you're explaining it to a middle schooler. Just try and make it as simple as possible, and then we can build upon the concepts.
So I won't go as far as middle schooler. Let's just assume that somebody knows what Bitcoin is, and maybe more specifically, you need to know what a Satoshi. If you don't know what a Satoshi is, this will be completely lost on you. A Satoshi, but I guess I could try to describe a Satoshi. A Satoshi is the smallest unit of account in Bitcoin. It's one. There's 100 million Satoshis in one Bitcoin, so you can break up one Bitcoin 100 million times. Now, what that means is there's going to be a set number of Satoshis from 0 to 2.1 quadrillion Satoshis. So there will be 2.1 quadrillion Satoshis ever in existence. Okay, so now we know what a Satoshi is, how many there are going to be. The next concept is that you can individually number them. So this is called ordinal theory. The idea that you can individually number every Satoshi that has ever existed using some numbering scheme. And it's just a view of the UTXO set and all the transactions that have occurred. And you can say, okay, I know like the number for all these Satoshis. And then you can assign some rarity to those Satoshis. So in ordinal theory, you think that, okay, there's a bunch of common Satoshis. They're all just regular Satoshis. The first Satoshi of a newly mined block is called an uncommon. There's only 760,000 of those in the world. Which is because that's how many blocks are we at now? 780,000 or so, because that's how many blocks there are. Then there's one called a rare, which is the first Satoshi from a difficulty adjustment. So the first Satoshi of the first block of a difficulty adjustment is considered a rare. So there's 390 of those in the world. There's an epic, which is the first Satoshi from the first block of a halving cycle. So there are only 3 of those. The fourth one will be emitted around this time next year, maybe a little bit, around this time next year. And then there's a couple of others that are conceptualized but don't exist when a halving and a difficulty adjustment occur at the same time. And then, of course, there's the very first Satoshi from the very first block called the mythic Satoshi. So that's what ordinal theory is. And this has been around for a long time. Like there's been people working on ordinal theory for a long time, long before all of the craziness that's happening right now. Just the idea that you can individually identify each of those Satoshis. The key unlock was when somebody realized, Casey Rodamore is the guy who came up with ordinals and inscriptions. He decided, well, you can actually do something called an inscription, which is you can stuff some extra data in the witness field of a transaction. The witness field is it's just a portion of the transaction data. What's interesting about it is that you get a 4x discount on the fee for inscribing to the witness data. So you get, if you think it's going to cost you 1,000 Satoshis, if it would cost you 1,000 Satoshis for a regular transaction, any data that's in that transaction or in that portion of the transaction would cost you 250 Satoshis. So that's what the witness data discount is and how inscriptions work. So it's just this extra data that you can put into an inscription. He came up with this little scheme called an envelope that uses a few of the opcodes that exist in Bitcoin Core to identify an inscription and then put that content in there. And then, of course, but then sorry, and then so that's that's great. Okay, so I can put this data into into this. The key unlock is when he realized, okay, so what I can do actually is I can link an ordinal and an inscription. So it's called inscribing on an ordinal. You basically link an inscription to an ordinal, and what then you have is ownership. It's effectively a pointer. The person who owns the ordinal owns the underlying inscription. So if I send you an ordinal, you own any inscription that is attached to it. And that's when things started going bananas, because now it's like, oh my God, there's NFTs on Bitcoin. NFTs are a huge market. There was like $25 billion worth of NFTs traded last year, and 25 the year before that in 2021. So NFT marketplace is huge. And so people started going crazy. Like, this is amazing. We went from 0 inscriptions in, I shouldn't say 0, less than 100 inscriptions in January of 2023 to now it's April 20th, 2023. And I think we're over 1.2 million. So there's been a huge growth in a number of inscriptions, and of course, ordinals. Of course, that comes with some controversies, which we can maybe get into. But hopefully that covers kind of what ordinals and inscriptions are, how we got to where we are today, and basically like how the industry is going to go forward from here.
Yeah, there's a lot to unpack here. So as you're going through it, a lot of people who are listening, they've probably heard of NFTs. There's been an NFT craze for quite some time now, and people just spending ridiculous amounts of money on NFTs, almost treating them like securities. I don't think many people are going and spending hundreds of thousands of dollars on a JPEG thinking that, hey, this is totally worth this much money. They're more so thinking there's going to be someone else that'll come by it for a larger amount sometime in the future. And in the past on this podcast, I've talked about NFTs and how it really is player versus player. There's a certain amount of liquidity in these tokens. And if you're not the guy who's the shark, who's going to be getting out at the higher value, and you don't have a plan going in, then you're going to be the sheep that is going to get absolutely taken to the cleaners. And it's been this interesting experiment, like interesting psychological experiment of seeing how people are gambling within NFTs. And there's been a lot of degenerate behavior in that industry. And you alluded to it as you were laying out ordinals and inscriptions. Do you think it would make sense at this point to talk about the controversy around ordinals and inscriptions and like basically trying to steelman both sides?
Yeah. So just quickly to the point about like NFT craze, I'm somewhat with you on that. Like I missed NFTs the first time through. Like I was like, I don't really get it. It's JPEGs on the blockchain. You right click and save. Like all of the memes of like the previous NFT cycle. I thought this was going to be sort of a flash in the pan. That was back when CryptoPunks. I was like, holy crap! Somebody paid $20,000 for a CryptoPunk, and now they're paying $200,000 for a CryptoPunk. I don't get it, but I'm not going to miss it again. So what that means is maybe I don't find value in it, or maybe you don't find value in it, but people do. People like NFTs. That's just the bottom line. That's just the bottom line. People love NFTs. So that said, moving into some of the controversies related to Bitcoin, those are like controversies that have existed in NFTs, regardless of whether they're on ETH or Polygon or whatever. Those are like some of the critiques of NFTs in general. Now let's focus in on some of the ones specific to Bitcoin. Okay, so when it first started happening, people were like, "Oh, you're bloating the chain. You're bloating the chain with this extra superfluous data that I don't think is important." This is I'm standing here as like the person who's against inscriptions. I don't find your data important. You should save that precious block space for people that are doing financial transactions. Those are the types of transactions that I consider important, and those are the ones that you should be doing. You shouldn't be doing inscriptions. There's somebody went so far as to like ask me on a Twitter space about what if a guy's family was held for ransom and they wanted Bitcoin, and your inscriptions held that Bitcoin from being transferred in this next block, and they got this family killed. I'm like, whoa, you've gone a little off the rails here. But like those are some of the things people are like, why aren't you should be prioritizing financial transactions. And so the answer was like, if and I've always said that. I've said this since 2017. If the protocol allows it, that's what Bitcoin is, and that's what people should be allowed to do. So that's pretty much, it's kind of a cut and dried argument around like, is this a valid use of Bitcoin? I would say yes, because it meets the specification, meets the protocol. There's valid transactions. People should be able to do, if they're willing to pay the price, they should be able to use the they should be able to use the block space. There's the famously Luke Jr. put out the, it's called the ORD disrespector patch. And basically what that does is it keeps your local node, if you build your local node and run the ORD disrespector patches, it keeps your mempool from accepting ordinals, inscription data. It basically looks for that opcode, that couple of opcodes that are in the inscription data and keeps those from going into your mempool so you don't broadcast those transactions. It's called the ORD disrespector patch. Was asked whether, why isn't Luxor running the ORD disrespector patch? You shouldn't be proliferating these things. You shouldn't be trying to mine them. That's like, you're effectively bloating the chain and keeping, financial transactions from getting into the chain. And the pushback that, okay, great. So Luxor if we decided to run the ORD disrespector patch, then we're much less competitive than all the other pools. We're effectively shooting ourselves in our own foot and taking money out of our customers' pockets and, effectively just virtue signaling that we don't think those types of transactions are valid. But what if our miners do? We don't act on our own. We act on behalf of our miners. Same if there was ever like a fork or anything, we would do what our miners tell us to do. We don't take a stance on that sort of thing. So if we run this patch, we're effectively taking money out of our miners' pockets because we're not mining these transactions, which have been very valuable. It's been up to something like $5 million worth of transaction fee that's been distributed to miners since all of this started happening, which is a meaningful portion of revenue for miners. And so I think that we would have been missing out on that. And of course, none of the other mining pools would run that. So you just go to another mining pool, make your money there, and we virtue signaled our way out of business. And so that was the initial argument. And I think really, and it was really 50-50 early on, like back when inscriptions first started. There were a lot of people very angry about this thing happening, just because it's not like a valid use of Bitcoin or whatever it was in their opinion. But I think now it's probably like 90-10. I feel like the majority of folks that are, I would have considered like probably anti-inscriptions. They don't really like the NFT aspect, but they're like, hey, if people are willing to pay the fees, like let them do what they want with the block space. Honestly, the block space wasn't being used before anyway. There wasn't a lot of Bitcoin activity anyway. So it was it's a use of block space that seems to be bringing in a lot of interesting, a lot of new participants. The number of nodes being run on the number of nodes has skyrocketed. The number of active addresses has skyrocketed. Of course, the mempool, I think it actually cleared yesterday, but the mempool has been historically full. Transaction fees have been historically high. So lots of good things have come, and I'm just trying to think of any of the other big controversies around it. It was really just the block space one.
Well, it'd be nice if you could also explain an example of how one of these transactions happens and what data is being put. So if you can give an example of one of these inscriptions that's happened and the equivalent kind of NFT that has been created within the Bitcoin ecosystem, I think it would just really make it a lot easier to conceptualize.
So there's a big project there's a big project called the Taproot Wizards, done by Udi Wertheimer and Eric Wall and folks that have been in Bitcoin for a long time. Somewhat been the ire of Bitcoin maxis and people that think they do things maybe the wrong way, but they came up with this idea of Taproot Wizards, and it's basically a bunch of pictures of goofy looking wizards, and they are inscribed on the blockchain, on the Bitcoin blockchain directly into the block space. And they haven't released any of them yet. They're still trying to figure out how they want to release them. But yeah, it's that the way it works is you basically get a picture of something that you want to put into this extra data. You need to have a full TX index Bitcoin node, which is the a full, basically kind of like a full archival node. It has all the data as well as the transaction data included, so you can get that information about the specific sats, which is why you need to have the extra transaction data. So you run one of those, and then you run this like sidecar client called ORD. It produces like an index that has it's maybe like 5 gigabytes. So then you use ORD, and from ORD you are able to do an inscription. So you basically point ORD to the piece of art. Let's just say I don't know, let's say a picture of your wife or something that you want to be inscribed and on the blockchain forever. Actually, one of the cutest early inscriptions was a note from somebody to his son who had apparently just been born, and he said, "You may never find this, but I just want you to know that it exists." It was actually quite cute. But anyway, wow. You inscribe your, you can push your, you push your art out there, and it goes out as just a regular transaction into the mempool, and then it gets picked up by a miner. Once the fee, once it reaches the top of the mempool and the fee is high enough, and all of those things, the miner picks it up and then includes it in a block. And once it's in a block, it can be indexed by ORD clients around the world. Then it shows up in the Ordinal Explorer and all of those things. Is that kind of the question you were asking? Is like how does an inscription actually end up on the chain, and what is happening here?
Yeah, 100%. And following up on that, you mentioned how there are different levels of rarity. You mentioned uncommon, rare. I forget the one after
epic,
rare.
mythic.
Epic, epic, and then mythic. If let's say that you're trying to mint those types of inscriptions, is that just a plan ahead? You're guaranteed to be able to mint on the difficulty adjustment type of thing?
How does that work? Nothing to do with mint. So you need to acquire. So like say the difficulty adjustment. That's there's 300 of those 390 or some of those sats available. What you need is the block. Like when a block is produced, it produces a UTXO to the miner, to the miner's Coinbase address. That miner now has a single UTXO worth, let's say, 6.45 BTC. Whatever, 6.25 plus the transaction fee. That block will have the rare sat at the very beginning of the output. And so then what you do is you send that output to an ORD client, and then you can take the ORD client and it will identify, oh yeah, this output has a rare sat in it because it has an index of all the sats. Up to that point, it knows that it's a rare sat. Then if you wanted to inscribe on it, there's some commands that you would use. And so you basically you take your art and then point to that rare sat in your ORD wallet. And then that transaction would basically take the rare sat from that output, make it the ordinal, broadcast that to the network, and then you'd get change. You'd probably get 6.3 BTC back in change from sending out that from that inscription. And all of the sats that come in your change are going to just be your regular common sats.
That's so interesting.
So you're not minting. You have to go. It's called right now. There's this niche industry of it's called sat panning, kind of like gold panning, but sat panning, very clever. Basically, people go through a bunch of UTXOs and look for interesting sats in them.
Wow. And so if you happen to mine this block with these rare sats, you might unknowingly just send a transaction and send that Bitcoin, and someone else might end up with that Satoshi. And so
it happens all the time.
This group is just trying to find the rare sats out there and then try and get in touch with their wallet holders.
Yeah, exactly. So they we're pulling out uncommons from blocks that we find and blocks that, basically UTXOs that we have found, maybe I have 25 of them. We have 25 of them or so, maybe a few more. But yeah, most people, I would bet that Foundry and Binance, they don't even know. They just get the uncommons and they just send them out just like any other sat. So, so that I would say that we're somewhat we're known as the ordinal pool. We do all the fun ordinal stuff. So yeah, that's.
You definitely know a lot about it.
Yeah, like you said, you could definitely just like send out an uncommon. Actually, very funny story. Or not funny story, but a lot of folks early on didn't know that you can't use an Ord wallet with a Bitcoin Core wallet. Ord will block that from happening. Like when you use the Ord client, it will block that from happening. But Bitcoin Core doesn't know the difference between two wallets, so it will just send Bitcoin out of there. And so a lot of people have like swept up their inscriptions with a Bitcoin Core wallet and sent those off to wherever they need, sent them off to someplace and lost a bunch of inscriptions. Most likely Binance and Kraken and Coinbase hold a ton of inscriptions that they don't know, that they'll never be able to recover. They don't even know that they have them. But same with uncommon sats. Like I actually went and found one of the epics, which is I think there's only 3 of them. And from what I can tell, Bitfinex is one. The Bitfinex cold wallet has hundreds of thousands of Bitcoin in it. They hold one of those, which is pretty cool. And of course, they probably don't even know that they have it. At some point, maybe they'll learn about Ords and you're like, oh wow, that thing might be worth a couple $1 million. We should probably go pull it out of there. But then again, it's a risk reward thing where if you have 500,000 Bitcoin sitting in a cold wallet, that's a lot of money. What is that going to end up being, like $15 billion? Is it worth pulling? Is it worth pulling out, like doing the ceremony to move any of those funds for? That would be what, a 0.03% return. Which like when you start getting to big numbers, it's crazy. Like $5 million. Is it worth it to move $15 billion to unlock $5 million? I would actually say no. Like that for 0.03% return on some money, it may not be worth going through the ceremony and potentially risking a large portion of that bag just by, like I said, going through the ceremony, producing the key through. I'm sure it's in a very secure multi-sig environment. I just don't think it may not even be worth it to move for that amount of money.
Yeah, that's crazy. So how much of that value is getting lost in that movement? Are you just talking about the risk of actually just those transactions just there for some reason being a mistake and
exactly,
and how the transaction sent, or is there an actual risk associated outside of the human error side?
Yeah, no, this would all be just like human error, malfeasance. I mean, I imagine people are watching the Bitfinex wallet, waiting for some of those coins to move, and then realizing like, the ceremony is occurring. I can, wrench attack or whatever to go find, some way to get $15 billion. I would say
what's a wrench attack?
Wrench attack is when you don't. A lot of times, people go through a very very rigorous ceremony to make sure they have a really secure.
A wrench attack? Are you talking about like? Or I'll let you go.
Yeah. So a wrench attack.
Okay.
So a lot of people go through
like
very sophisticated very sophisticated ceremonies to ensure that they have great digital security. They've got a ledger and they've got a multi-sig and they've got their passwords is stored on like engraved into a piece of steel stored in their a vault in their backyard and all that stuff. Well, you spend tens of thousands of dollars, securing your bag of Satoshis. And the wrench attack is basically somebody coming in with a wrench and hitting you in the head and telling you, if you don't give me your Bitcoin, I'm going to continue hitting you in the head with a wrench. And so most likely all of that money that you invested in your, in the security of your digital asset, you need to like secure your physical asset as well. So physical asset being yourself. So anyway, that's what a wrench attack is. But in this case, I was just saying that like, to get that rare sat out or that epic sat out of the Bitfinex UTXO, what you have to do is you have to produce a spend from that private key. That private key is most likely secured in incredibly secure vault, probably multiple vaults. Most likely it's like a 3 or even 5 multi-sig for that amount of money, and those vaults are probably not anywhere close to each other. And so you have to like, the coordination of getting like that money spent is probably very difficult. I don't know for a fact, like how it's set up at all. They probably don't want me to know. And then probably best that I don't know. But what I'm saying is it's set up such that that money is never moved. right now. And so what you would need to do if you wanted to go get one of these epic sats is you would need to produce, you would need to go through the ceremony to move money out of that massively secure wallet, which, just like you said, introduces some avenue for risk, where right now the risk is, let's say the risk is zero right now, but, and the risk of moving messing up the spend or being attacked or whatever is, say, 0.1%. Does that make sense for $5 million on that massive bag? Most likely it does not. It does not.
Yeah.
And so I would say that, most likely those sats will stay where they are forever.
Wow. This is so fascinating. I'm so happy that you know so much about this topic. I've spoken with someone else about ordinals before, but speaking with you right now just really...
Yeah, it has been. It has been a big focus, and the reason being is, like, you look at Bitcoin mining, and you look at the addressable market for Bitcoin mining, and it's maybe $10 billion in a year. The NFT marketplace is huge. It's just a big space. People are really interested in it. Whether Bitcoiners traditionally eschew NFTs and just like shitcoin light or some other type of shitcoin. People like them. People freaking like NFTs. Like, people that have a CryptoPunk, they love that thing. That people that have a Bored Ape, that people that have a DGod, they just like them. I don't know it's a lot of it is lost on me, but they just like them. That's the bottom line. And so, looking at the addressable market for the NFT space, NFT marketplaces, NFT aggregators, data, like, that's a very thriving ecosystem. Some of the biggest companies of the last cycle were NFT, marketplaces and NFT infrastructure. And so, Luxor has a very unique, Ordinal Hub and Luxor have a very unique opportunity here, given that we are a technology company in Bitcoin mining. Ordinals are basically, an extension of Bitcoin mining. Like, you can produce some of the most interesting ordinals by being partnered with a mining pool. Mining pools are able to acquire these uncommon and rare sats more easily than others. It's just a great synergy for Luxor, being a technology company, to go build something that's pure technology. There is really no physical aspect of NFTs, that sort of thing. It's just it's very interesting to be involved, and it seems like a really broad avenue for new participants. New investors in the space. There's a whole class of funds and investors that go out and acquire rare NFTs and things like that. They'll now be coming to Bitcoin, and along with that comes a ton of new capital. So I would say that it's I'm a huge, obviously I'm the ordinal guy, but I just think that all of the benefits vastly outweigh some of the downsides that come with NFTs being scammy and things like that. But there are real legit projects that people use and secure and enjoy. And just because some NFT scams happened in the past, I don't think that we should drop the entire industry.
Yeah, that's a very good point. And to that point, I think that a lot of people's views on NFT have been colored in a big way by all the scams that have been out there. And one of the things that stands out to me about this is how this is like a better approach to achieving what I think a lot of NFTs were trying to achieve, which is this level of restricted supply, rarity. Just not with these NFT projects, you could just create another coin, print as many. You could say that you're only printing 10, but the marginal cost of production and the rarity is only whatever they can manufacture in terms of the appearance or the appeal of the project, if that makes sense. Versus on Bitcoin, it's very mathematical of this is how many of these there are. This is how many there are going to be in the future. And as more and more people decide, hey, I find value in this, I think that this is a very interesting collectibles. I don't think anyone can argue with you and say, oh, well, collectibles don't have value, or there's not an additional value outside of pure utility. I mean, we've seen throughout human history that there is this extra availability for value or perceived value outside of just pure utility. And I think that a lot of it's been hyped in the NFT world, but in regards to the mathematical certainty and the transparent provability of how many of these uncommons, rare, etc.
Yeah.
inscriptions there will be.
Show me a Bitcoiner that didn't like Pokemon. Like
I love Pokemon, man.
I went ape for Pokemon when I was a kid. Like it's exactly. There is value in collectibles, whether people like it or not. A lot of people, a lot of Bitcoiners have maybe, I would say, lost a lot of the culture that comes along with Bitcoin. Like the very first coin, like the very first Genesis block has an inscription in it. Chancellor on the brink of Chancellor on the brink. Like it's very that was effectively an inscription, just TXT. And so I would say that I agree with you. The point. So we're building Bitcoin. We've been building towards a Bitcoin Bitcoin hyper Bitcoinization, Bitcoin ubiquity, and general acceptance of Bitcoin. And we think that this thing is going to become sound money. This is the sound money of the world that unlocks people. They can opt into this new financial system. They can opt out of whatever financial system they're in and into this sound money ecosystem where they know how many Satoshis are going to ever be printed. They know what rate they're going to be printed at. All of those things that produce a sound money environment. You now have a sound art environment. Like you said, you don't know, like it's impossible to counterfeit and it's impossible to counterfeit an inscription. You also mentioned, like a lot of the scams that happened in NFTs were actually, it's not like the projects were scams. They got scammed because of a bad smart contract. Smart contracts introduce this whole avenue of potential risk for not only participants, but the producers of art and the ecosystems that they operate in. A lot of people have lost NFTs to bad smart contracts or bugs or hacks or things like that. In Bitcoin, it's just UTXOs. We have a really, really great way of securing our UTXOs. We've got our hardware wallets and really secure methodologies for securing our Bitcoin. And since inscriptions are just UTXOs, it's going to be a lot. Probably 2 orders of magnitude more difficult for a lot of the hacks, quote unquote, that we've seen in ETH land and places that have smart contracts to happen on Bitcoin. So I'm a big proponent of like Bitcoin produces sound money. Bitcoin can also produce sound art. I'm a big fan of that, and I also like seeing the creative and interesting culture of Bitcoin coming back here in the last 4 or 5 months.
This is the first time I've heard the term sound art, but I really like the way it rolls off the tongue.
It's sound money. It's sound art.
Yeah. Awesome, man. Well, I'm looking at the time. We're running up against it, but this has been an unbelievable conversation. I've learned so much from you in this conversation, man. Thank you so much for taking the time. I absolutely love what you're doing at Luxor. For everyone listening, they got to go check out what you guys are building. You guys are constantly within the mining industry pushing the brink in terms of innovation. I think that anyone listening to this conversation could just sense that from everything that you were talking about related to mining all the way to ordinals and inscriptions. Have massive respect for you, my man. So thank you so much. We'll have to do it again sometime.
Yeah, appreciate it. Thank you so much. We went on a lot of topics, but tried to cover each of them as best I could. Been told I'm a little long-winded sometimes, so hopefully people were able to pick out a few nuggets in there, and it wasn't all just rambling. But I really appreciate the time today, and look forward to the next one. There's going to be interesting stuff. There's always interesting stuff happening in Bitcoin, so we can talk about whatever the story of the day is at that point as well.
So that was it for today's video. On this channel, we upload content around Bitcoin and Bitcoin mining. So if that's of interest to you, subscribe. Click on this video right here. That's it for me today. I'll see you next time.